Verizon has been one of the worst performing stocks in 2023, sitting at $37.49 per share at the same exact price it was trading at in 1998, excluding dividend, of course. I think Verizon has the potential to return amazing returns to shareholders in 2024, not just through a 7% dividend, but also some price appreciation. I've been a little bit bullish on Verizon for a while. I'm still bullish on the company. I'm going to tell you why and why I believe Verizon could be an amazing gainer in 2024, which is normally unlikely for the stock as it doesn't have much upside potential other than the dividend. Now, if you look at something that's pretty interesting, and this is the correlation between the 10-year yields and Verizon. Whenever, if you like, as Verizon is the white one, the 10-year yield is the orange one, and whenever yields were going up, Verizon was coming down. As of late, whenever the 10-year has peaked and has started to come down, Verizon has been on a massive rally from $30 to $37 per share. So we can see the inverse correlation between yields and Verizon. Because Verizon is a dividend stock, it was trading at an 8.5% dividend. Now it's 7%. And whenever interest rates do come down in the future, Verizon's 7% yield right now is going to look extremely attractive maybe a year or 2 years from now, if you believe the 10-year and bonds and yields in general are going to be much, much lower, as Powell indicated over 3 rate cuts in 2024 and beyond. So if you believe we're going to have lower interest rates, I think Verizon is an amazing way to bet on it, because you don't only get the 7% dividend, but also some price appreciation. This is pretty interesting. In terms of the business itself, it hasn't been doing so well lately. Revenues declined 2.6% year on year. I've honestly been liking AT&T a little bit more than Verizon. I mean, I've been surprised by the performance of the metrics of AT&T. Verizon is still not bad, but it still declined around 2.6% year over year in terms of total revenues. But something that I've been paying attention to, which is very important with these companies, is the free cash flow. The free cash flow went from $12.4 billion to $14.6 billion. And although the cash from operations is pretty much the same, the main reason free cash flow has increased is because of the capital expenditures. CapEx has been decreasing a lot for Verizon, and it's expected to decrease much more into the future. And this is my main thesis with Verizon, because Verizon was investing in a lot of different assets, a lot of different places, and these investments are pretty much done, and CapEx is expected to decrease over the next 2 to 3 years, which is going to increase free cash flow. This is why analysts are expecting free cash flow to have troughed in 2022 around $14 billion. 2023 is $17.7 billion, close to $19 billion in 2024, and pretty close to $21 billion by 2027. I'm not betting on $21 billion, but something between $17 to $19 billion is pretty amazing for something like Verizon, and I believe it will be sustained and it will likely grow from here, even if revenue doesn't grow. But if CapEx is coming down, free cash flow will be going up. And one of the reasons why something like Verizon has been just trading so poorly is because of the massive debt position that they have with much higher interest rates. Over $143 billion of debt for a company like Verizon. Even though a lot of people don't understand that companies like Verizon should operate with a lot of leverage, because the business model is very resilient, is very predictable, so you might as well leverage the business and try to increase per share metrics and create value to shareholders. So if I was Verizon, I would have a lot of debt, but I think $143 billion is extremely excessive for something like Verizon. I think the debt has to come down, and this is a perfect opportunity for the debt to start coming down, because if they do make something around 18 or 19 billion of free cash flow, they pay out around 10.8 billion of dividends. So this would leave them with something pretty close to $9 billion of extra free cash flow every single year to use it to lower the debt position. This is something that Verizon couldn't do just a year or two ago. Whenever the free cash flow was closer to 14 billion, they were paying 10 billion, they only had like 4 billion left, which is nothing. But as of 2023 and 2024, as CapEx is coming down, they're going to have $8 to $9 billion of extra free cash flow to start paying down the $143 billion worth of debt. This could cause a massive change in sentiment in the stock, and it could benefit lower interest expense, increase free cash flow even more, and benefit investors in general. I'm personally not seeing a dividend cut with Verizon. Verizon unless something major happened with the Leeds cable, and a lot of you know about that for AT&T and Verizon. I'm not sure what could happen with that stuff in the future, but if everything stays the same, I'm not seeing a dividend cut with something like Verizon, and they do have some pretty big maturities. I mean, they have around 16.2 billion maturing in 2024. They will most likely refinance it, even if it's at higher interest rates. They will have to refinance it, and I'm sure they could. I mean, this is Verizon, and creditors really like these kind of companies because of the predictability of the business model. But other than that, they don't really have anything major going on. Everything is pretty much after 2027. Over 99 billion of that matures after 2027. So over the next few years, I think the dividend is safe. I think the company is pretty safe in general. I see an opportunity for a massive re-rating in the stock because of capex coming down, free cash flow going up, which leaves them more free cash flow to pay down the debt every single year. And this is something pretty amazing with a 7% dividend and potential lower interest rates in the future. I'm personally seeing a pretty decent value proposition with Verizon because you get paid to wait, and you also could benefit from price appreciation in the future. Of course, I could be wrong, and maybe interest rates start going up again, and if that's the case, then Verizon is going to start coming down. I showed you the correlation between the 10-year yield and Verizon stock. This is something I can't predict, but in terms of the overall thesis, I think Verizon is undervalued. I mean, it could go lower before it goes higher, I don't know, but I think it's undervalued. I think the 7% dividend is safe. And normally what I do is I buy these stocks like Verizon, BTI from time to time, and high yielding dividend stocks, and I sell covered calls on them, and I collect another like 5 or 6% of yearly yields, and then I get something 13 to 14% yield on this kind of investment. I don't own Verizon right now, but this is what I normally do whenever I have very high yielding stocks, and I share more of that stuff in my own investment group if you're interested in joining. But this was my video for today. It was not financial advice. I hope you enjoyed the video. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.